You are listening to C-Suite Perspectives, a podcast by the Conference Board.
Welcome to C-Suite Perspectives, a signature series by the Conference Board. I'm Sara Murray, Managing Director International at the Conference Board and guest host of today's episode. Today we're discussing the latest results from our European CEO Confidence Survey and what they reveal about the outlook for business leaders across the region. CEO confidence in Europe remains in negative territory for the fourth consecutive reporting period as executives continue to grapple with geopolitical volatility, energy insecurity, weak growth prospects, and ongoing concerns about Europe's long-term competitiveness. At the same time, the findings reveal a more nuanced picture. While macroeconomic sentiment has deteriorated, some company-level expectations have shown signs of resilience, even as concerns around investment and employment and the broader external environment persist. Joining me is Alejandro Fiorito, Economist at the Conference Board Europe. Welcome.
Thanks for having me, Sarah.
Before unpacking the results, Alejandro, could you give listeners just some context around the survey itself?
Yeah, this is a survey of CEOs, as the name is pretty self-explanatory, and we do it at the Conference Board in collaboration with the European Roundtable for Industry. We ask leaders of around 60 of the largest non-financial companies in Europe about business conditions and business prospects. These companies are, of course, also multinational, so they have business elsewhere, not just in Europe. We've been doing this survey since 2020, twice a year, and it's based on questions that our colleagues in the US have been asking since 1976. We also have results for China since 2022, so we have some comparison points there. This latest survey specifically was done between April 10th and April 30th, with most responses recorded in late April. This is usually not that relevant, but this time it was, because of course this is a period in which the conflict in the Middle East, the war in Iran, already started to weigh on business. It's also, I think, relevant to note that the macroeconomic conditions, oil prices, during the time we were carrying out the survey were not in panic mode. The numbers were not as terrible as they were maybe in March. To go back to what we measure, as I said, the name pretty much says it all. We measure how confident CEOs are feeling about the economy in Europe, but also elsewhere, and other industries. We measure this confidence from 0 to 100, and our neutral level is 50. When we discuss results that are below 50, that's negative or pessimism. Above 50 is optimism or positive results.
Okay, what's really valuable about this survey is that it's capturing Europe's largest industrial companies. From what I understand, you had a 98% response rate from those CEOs, really looking at current conditions, the outlook ahead. So it's not just a sentiment survey, it's thinking about investment, employment and sales and how that then translates into business decisions.
Yes, exactly.
Okay. So how has CEO confidence in Europe changed in this latest survey and what's driving these results?
The latest reading was 40, which was 4 points below the previous result in late 2025. Then it was 44. This is a negative result below the threshold or the neutral level of 50. As you said, this headline number captures several things. It's mostly explained by a worsening of the macroeconomic outlook. For comparison, we also have the results from the US that just came out, and they're at 47. So a little more optimistic, but still negative. We don't have yet the numbers for China, but in recent surveys, China-based CEOs have also been more optimistic than Europeans. As I was saying, the overall confidence measure is composed of 3 questions. The 2 that perform the worst for CEOs based in Europe are the ones where we ask about current economic conditions and expectations for the economy. That's why we are saying in this latest report that it is the macroeconomic outlook which is what is driving pessimism. Both of those components are below 40, which we consider quite a negative level. To put it in context, there are 2 striking results. 2/3 of respondents think that the economic conditions currently are worse than they were 6 months ago, and over 50% expect these economic conditions to deteriorate further in the next 6 months. This result is quite negative, but not that surprising. We know there is a tough external environment with the ongoing conflicts, and we've actually already been doing some downward revisions to the economic outlook in the last few months. The third component of the survey is the one that has a little more surprising results, perhaps. And this one we ask about industry-specific prospects. That one has improved slightly and it's around neutral. It's at 49. This might be related to some very specific idiosyncratic factors for certain industries. As you said, we have a lot of different sectors covered, and this most likely reflects that European businesses have gotten used to a difficult external environment and are used to dealing with shocks like the one we're experiencing now without this affecting their operations, maybe as significantly as these shocks affected them in the past. So I think this third component shows some resilience at the business level, even if the macroeconomic outlook is quite negative.
The headline is clear, though. Confidence has weakened again and remains below the neutral threshold for the fourth consecutive surveys. It is a difficult, as you said, external environment, the geopolitical instability, weaker growth prospects, particularly tough. How do the results compare historically?
As you very well said, one of the key results is that this is the fourth consecutive survey that's negative. Since late 2024, we are measuring negative confidence, so pessimism, which is quite a long time if we think about it. If we look a little farther back, since 2022, so in the last 9 surveys, we've only had 2 positive readings. 7 out of the last 9 surveys have been a negative for CEOs in Europe. This number, concretely 40, it's again negative, but not so low. It is above historic lows. The historic lows that we've recorded in the past were the ones following Russia's invasion of Ukraine in the second half of 2022, when the energy shock really hit companies. And more recently, when the US announced tariffs in April 2025, during those periods, we had the CEO confidence indicator fall below 30, much lower than we are now. I think this tells us that because there's some similarities with the shock we experienced in 2022, the data that we will start collecting in October for the second half of the year and for late 2026 is going to be quite interesting to see whether we continue the downward trend that we're seeing now. Again, these results for the first half of 2026 are quite similar to the ones we had in the first half of 2022. The ones for the second half, it will be key to see whether they stay above 50, even go back a little further up, or the shock really materializes and drives down even worse results in terms of confidence.
Well, the results then are not at crisis levels. They do point to a prolonged period of caution among business leaders. There's a persistent gap between how confident CEOs feel about business conditions in Europe and about conditions outside the continent. What do you think explains this?
Beyond the main headline number that we were just discussing, we also ask about their business prospects in terms of sales, investment, and employment for the next 6 months, whether companies see their business increasing or decreasing sales, business, and employment. Since all these companies have a business in Europe and outside the continent, we ask them to differentiate between those two geographies. We have data going back around 18 surveys in total where we ask these questions. What we see is that there's always been more negativity, there's always been more pessimism for business prospects in Europe than there is for their business outside of Europe. I think particularly since 2022, this gap has increased and remained large, with business prospects in Europe being negative below the 50 neutral level, and business prospects outside of Europe being positive. The latest results, they improved a little bit for business in Europe, but they remain negative at 48, while they're positive outside of Europe. And because we have the 3 subcomponents, we can pinpoint what part of their business prospects is driving this pessimism in Europe. And most of the gap is explained by negativity about investment and employment prospects in Europe. There are some interesting trends here where sales have been fairly resilient and even improved in Europe in our latest reading. They are the only positive component and fairly close to sales prospects for business outside of Europe. I think around 42% of respondents expect sales to improve or increase in Europe, and 46 to stay about the same. So very few expect sales to decrease. Investment is where we see some negativity, and investment prospects have been dropping steadily in Europe for several surveys in a row now. Most respondents, 54%, expect capital investment to remain unchanged. Not so low, around 20% expect capital investment to decrease. So capital expectations, investment expectations in Europe are fairly negative or stagnant. Unemployment, the third component, is the one that's been the most negative. Since 2022, fairly consistently falling in Europe. Interestingly, outside of Europe, we've also seen a deterioration. 46% of respondents now anticipate a moderate reduction of their workforce in Europe in the next 6 months. This is double what we see outside of Europe, where only 23% expect a reduction of the workforce. Employment prospects, I would say, are in a pretty downward trend for both.
This is one of the most revealing findings of the survey, that CEOs continue to see stronger opportunities outside Europe than within. And I just think the gap is this ongoing concern of Europe's growth trajectory, the regulatory environment, the investment attractiveness compared with other regions. It's really revealing. We're going to take a short break and be right back with more of my conversation with Alejandro.
What does the future of work mean for your employees? How will your company navigate the future of AI? Will there be a global recession? At the Conference Board, our experts translate the latest research and economic analysis into insights and real-time problem solving for your organization. Membership at the Conference Board provides your team with an assortment of knowledge from economics, marketing and communications, governance and sustainability, public policy, and human capital. As a member, you'll have access to our center experts, member-exclusive events, data and benchmarking tools, and peer sharing that will help you understand the present and shape the future. Consider becoming a Conference Board member today by visiting www.conference-board.org.
Welcome back to C-Suite Perspectives. I'm your host, Sara Murray, Managing Director International at the Conference Board. I'm joined by Alejandro Fiorito to discuss the latest findings from our CEO Confidence Survey. Given the complex external environment, what are companies telling us about how they see geopolitical risk, and how are they responding to shocks?
In this latest survey, we asked what geopolitical developments pose the greatest risks for their business. The results are, some of them are pretty unsurprising. Over 50% of respondents say that energy insecurity and accelerating fragmentation are either their first, second, or third main concern. Those are very related to current news. If we round out the top 5 main risks, other issues related to recent conflicts like insecure trade routes, weaponization of critical raw materials, or directly military conflicts are the 5 main risks for European CEOs. The reaction part is where we get some more nuanced or relevant results, because this links to how they perceive the current conflicts and how these current conflicts are affecting their decisions. Despite how large and significant these geopolitical risks are, what companies are telling us right now is that they mostly see a near-term impact and that they're not taking strategic decisions to address them. They're mostly responding tactically. They do not see a structural impact of the current shock. Let me give you some examples. First, we ask about whether they are increasing reliance on European providers for economic security reasons. And the responses were pretty evenly split. A very slim majority, 51%, told us that they were not relying more on European providers for economic security reasons. Around 45% told us that they were doing it, but only moderately. And therefore, only 4%, so very few respondents, told us that they were actually substantially increasing their reliance on domestic providers. This, I think, tells us that the buying European rhetoric that we've seen a lot in Brussels and elsewhere in Europe is not very successful, and that current shocks are not driving this structural change towards more reliance on domestic providers, at least for the European business that we survey. When we ask about what specific actions they're prioritizing to deal with the shock, what they told us is they're mostly, again, reacting tactically rather than strategically. Their priorities are mostly reviewing and strengthening supply chain resilience, managing cost, updating contingency plans, adjusting prices. They're very focused on the direct, immediate impact. Very few respondents tell us that they're looking for new business opportunities or changing their investment timelines or their capital allocations, which we would consider more structural changes or more strategic decisions. What we're really seeing is firms managing the immediate impact and the short-term effects of these current shocks.
Indeed. In recent surveys, we've been asking questions about the long-term and medium-term business conditions in Europe and the rest of the world. How have these been evolving?
They've been evolving quite significantly across multiple regions and countries. We asked questions in the latest survey about long-term business conditions. In previous surveys, we had asked about the medium term. When we say long-term, we mean over 3 years. When we say medium term, we mean 1 to 3 years. In this latest one, when we asked about long-term business conditions, and by that we mean the regulatory environment, the attractiveness of investment, we got pretty mixed results, and I think quite interesting ones. To sum up, for the largest economies, for the EU, for the US and China, CEOs are quite negative about the EU. This will not surprise you given the conversation we've been having. Around 60% say that they assess the business conditions in the long term as negative. They are fairly mixed on the US and China, which was quite interesting. They're a bit more positive for the US. 40% view conditions there in the long term as positive, and 34% view conditions in China as positive. But there's 60% that assess them roughly either neutral or negative for both the US and China. The results are very rich because we ask about many different countries and regions. Here I would like to highlight 4 results beyond these main or largest economies. First, I would say bad news for Europe, unfortunately, go beyond the EU. The UK, we also ask about the long-term business conditions there, and a third of CEOs told us that business conditions are negative, are going to be negative in the long term for the UK. Only 16% saw them as positive. Across advanced economies, there's some positivity for other G7 and OECD countries like Australia, Canada, Japan, or South Korea. They were more positive. But for European-specific countries, they were pretty negative. The second result I would like to highlight is for the US. The results for the long term contrast with the responses we got in the past about medium term. In late 2025, we asked about medium-term investment strategies, and they were quite positive for the medium term. 45% of CEOs told us that last year, 2025, they had changed their plans to invest more in the US. And last year was not a normal year, so we consider that to be quite a positive view on the medium-term prospects for the US. Only 10% had changed their plans to invest less last year. But now when we ask about the long-term investment and business conditions, the share that have negative views about the US is relatively large. It's at 27. The third thing I would like to emphasize, again, across large economies, but beyond the EU, US, and China, is that the results for India were very positive. So positive, I call them surprising. 20% of CEOs have positive views about the long-term business conditions in India, which is the largest share across any country or region that we ask about. The fourth point, and to conclude with other emerging market economies, CEOs were quite positive about the prospects for other Asian, you can think Indonesia, Philippines, large Asian countries beyond India and China, and Latin America. As expected, they're pretty negative about the Middle East, which I think might be short-term shock, but also I think this signals that while, as we were discussing before, they expect the shock of current conflicts in the Middle East to be near-term for their business, for the region, for the Middle East as a whole, they do see a long-lasting effect.
Indeed. The contrast is quite striking, in particular that India emerges as a standout growth story. But what explains the negativity about Europe? And are there silver linings elsewhere?
There is a clear trend of persistent negativity about both the macroeconomic outlook and business specific conditions, as we were discussing about employment and investment particularly. A recurrent theme here has been CEOs' frustration with the depth and the speed of reforms in Europe. In the previous survey in 2025, very few, less than 20%, told us that they were seeing a positive impact from the reform agenda in terms of single market completion, simplification, the Draghi and Letta agenda, based on those reports. In this survey, we asked a much more direct and specific question about the single market, given in particular that EU institutions have a plan to advance significant legislation to increase the integration of the EU single market. And they have stated that they want to pass this meaningful legislation by the end of 2027. So we asked CEOs if they expect the single market to be completed, which we mean just EU integration to advance meaningfully. The concerning result is that 65% told us that it won't be completed by 2030, even after the sort of self-imposed deadline. Only 16% thought that it would be completed by 2028, but all of them put caveats on this. They said it would be in a more limited form, it would be a sort of a two-speed solution. Of course, I think sometimes we're too harsh on EU institutions, and this is not the whole story, but these results are representative of both the challenges and the limitations in terms of response capabilities that we currently have for Europe. You also asked about some silver linings, so I will try to get some more positive here. One very positive result for the global economy, but also in a way for Europe, is the positivity that CEOs have about business conditions in India and to a lesser extent about other Asian countries and Latin America. I say this also affects Europe and EU institutions because this validates some of the efforts of accelerating trade deals, accelerating collaboration with these other regions. If these regions are going to do well in the long term, this is the right approach for Europe to further integration and collaboration with them. The second positive point is CEOs being so positive about G7. It's quite remarkable, in part because those are also priority partners for the EU, but also because they have similar challenges in terms of demography, growth to Europe. We can learn something about how these other advanced economies are dealing with these shocks, but also I think this might signal that perhaps Europe-based business leaders and analysts like ourselves are our own harshest critics. And the fact that we're assessing other advanced economies more positively might reflect that there is some sort of structural pessimism here that is very Europe specific.
It seems, again, the kind of recurrent theme is the concern about Europe's long-term competitiveness, the ability to complete the key economic reforms, including the single market. Just building on the strategic relationships the EU should prioritise, what did CEOs tell us about the EU and its key partners? Anything more on that?
First, I would define strategic relations. In the survey, we asked concretely about a strategic relationship and spent some time thinking about what do we mean by this. The way we frame it is sustained cooperation across many areas. We listed trade and investment, supply chains, but also technology, security, climate change. We asked CEOs which countries and regions the EU should prioritize for deep strategic relations that go across many different sectors or priorities. The main results are to be expected. CEOs think that traditional partners like the UK and the US should continue to receive high priority. Even though CEOs are quite negative about business prospects in the UK, they still see the UK as the key partner. If we did a ranking, the UK would come first here, which shows, I think, that these strategic partnerships and the logic behind them goes beyond the economic rationale or the business, and it's about shared values, shared culture. For the US, it's interesting too that despite some turbulence in the relationship recently, over 90% of the CEOs think that the EU should give the US high or moderate priority. Here I would put the US and China, despite a very different relationship, in a similar bucket where there's inevitable partners, right? On China, the results are a bit more mixed, in the sense that a lower share tells us that the EU should give high priority to China. Still close to 80%. I think that China should be given moderate or high, but I think only 40% said that the EU should give China high priority. This won't be surprising given the positive results we've emphasized for the Indian economy, but beyond the US and China, CEOs consider India should be given the highest priority. The numbers for India are better, actually, than for China. To 60% say that the EU should give India high priority. And that number, just the high priority share, is also higher than for the US, which is 53%. We can take one final positive message from these results in terms of strategic partners, and is that CEOs in Europe still see the case for European integration and cooperation. Beyond the UK, we ask about what we call Greater Europe, mainly Switzerland and Norway. As partners, what we get is that this should be given second highest priority. So UK, Greater Europe, and India actually come out as the top 3 priorities for Europe. And these, I think, signals as well an openness to the rest of the world that we should welcome. There is no region that the CEOs think it's not important for the EU to establish strategic partnerships. Persistent openness, even in a fraught external environment, even with growth headwinds, is what remains good news from this survey.
This reflects a pragmatic view from business leaders that CEOs see maintaining strong ties with the traditional partners, like you said, the UK, Switzerland, Norway, and US is important, but they also recognise the growing importance of India and other advanced economies. It just seems that Europe needs a broad and diversified network of partnerships to strengthen competitiveness and resilience in what's an increasingly fragmented world.
Yes, absolutely.
Taken together, these results paint a picture of European CEOs who remain cautious about the continent's economic outlook, but are actively adapting to a more complex and a more uncertain world. That actually brings us to the end of this episode. Thanks to all of you for listening to C-Suite Perspectives. I'm Sara Murray, and this series has been brought to you by the Conference Board.
You have been listening to C-Suite Perspectives, a podcast by the Conference Board.